Stock, crypto, and options trading has large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose, and this is neither an offer to buy, sell, or recommend a particular stock, crypto, or option.
What a beautiful day. I'm the king of all time, and nothing is impossible in my all-powerful mind.
All right, everybody, good morning to Snipers Live Trading. Let's get started here. Let me just say, I'm going to say hi to everybody. I'm back in Costa Rica. I'm at Gerardo's house. He's right over there. How's it going, everybody? Good morning. Good morning. Hey, Felicia. Haven't seen your face in a little while. Good to see you. We got Larry and Spiros. Hey, everybody. Let's get going. I could say hi all morning, but let's hop in and take a look at what's up in the markets this morning. We had some pretty bearish days last week. We're going to look at all of that in a minute. I'd like to go into CNBC and Bloomberg just to kind of get a quick feel for the hot topics. Didn't see a whole lot this morning so far anyway. Wells Fargo upgrades DraftKings. DraftKings could be something we could look at this morning. And by the way, if you have any stocks you're looking at, any sniper candidates, anything whatsoever, please go ahead and post them in the chat box, and Gerardo will bring them to my attention. 5 things to know this morning. I like to go here sometimes. Markets look to rebound. Not rebounding so much right now, but we'll see. I want to talk to you about distribution days. We had a few of them last week. What are they? You'll find out in a minute. They seem to be forecasting perhaps further bearishness. Walt Disney will headline another busy week of corporate earnings reports. So Disney has earnings this week. Let's keep an eye on Disney. Monday, Lucid, Planeteer, Eli Lilly tomorrow. There's some big names here. There's some big names here that may end up being sniper candidates after earnings. So keep an eye on those stocks. If you want to find them, just go to CNBC.com. 5 things to know this morning. Berkshire Hathaway's billion-dollar balloon. Oil surges again. Oil is on the rise, man. We should look at oil as well. Let's see what else. Billion-dollar Barbie. Warner Brothers, smash it. I can't even believe that Barbie is such a... I haven't seen it yet. I'm not even sure I want to see it. $1 billion for Barbie. Wow. So that's good for Warner Brothers. Maybe there's some, actually, let's look now. Now that I'm curious, you're going to get a look into my crazy thinking mind here. What is it? WBA for Warner Brothers. Is that right? What is it? Gerardo, you had a trade on this earlier. Warner, I can't remember the symbol. WBD. That's it. I have it. Thank you, bud. So here's Warner Brothers up to 14 to start the market today, 1409. That is strong resistance. I'm not interested in this stock until it closes above 14. Maybe coming in and selling a put credit spread underneath could be interesting with what's going on with that smash hit Barbie. All right, let's take a look at the US economy for this week. It's a pretty light week, actually. Really, all we have is jobless claims on Thursday. They ticked up a little bit last week. Not what the Fed wants to see. We also have the CPI, Consumer Price Index, and the PPI this week. Those are bigger reports, and we'll see what those do as well. So those are all kind of leaning in the right direction. The thing that spurred on a correction last week was the ADP jobs report. And if we come back here, let's go right into the futures now and take a quick look at what's up here. I'm going to start with the S&P 500/ES. And what's a distribution day? I wanted to talk to you about that. Okay, the distribution day, typically, it can occur anywhere, but typically they're most important when you see them at market tops. And certainly that's a 19-month high we've just had on the S&P 500. And there we had a distribution day. Keep your eye on the volume down below and see if you can detect what a distribution day is by just watching the volume. There's a distribution day. There is a distribution day. There is a distribution day. There is a distribution day. All right. So distribution day is where stocks are sold off.
So given that institutions control most of the market, a distribution day is when institutions are selling more stock than they normally do. And you can detect that by looking at above average volume. So distribution day 1, 2, 3, 4 out of 7 distribution days. All right, when those start to stack up, and they have now, then more likely there will be more distribution. We could see a rebound right off here at 4,500. Again, I never get tired of saying this because it's so freaking awesome. The low of the day, the close on Friday was 44.97.88. Why don't we just round that up to 4,500? Right at 4,500. Support on Friday. It's bouncing off 4,500 today, the S&P 500. Back over here, we have resistance. Here we have support, 4,500 support. So maybe we get a bounce here, maybe, but these things here are telling. If you go to any market top anywhere, you're going to see distribution days as a market hits a top and has a major correction. Always, you'll see distribution days in the early stages of a corrective market. So that's where we are. I'm not sure. I'm seeing a bounce to start the morning, but I've been doing this so long. When I see these things stack up, watch out below. Let's take a look at the SPYs. It's not going to have today's data in them yet, but man, when I see this here, a break below 450, which was support on above average volume, it's very likely, more likely, for this to continue down to 445, the next support level. So that's where I think we might be headed. You never know in this crazy market, but distribution days they work. And so watch out below, be cautious, taking on any bullish put credit spreads. Got to be careful there. In fact, back in COVID, I had one of my best credit spread trading months when the markets continued to drop below support on above average volume. I was selling bearish credit spreads in that bearish market, and I killed it with distribution days, stock closing below support on above average volume. It's a beautiful trigger. Now, if I was to do a trade on this one right now, on the SPYs, I would be looking at selling a credit spread maybe up here at 460, a bearish credit spread at 460. You can go to the NASDAQ, any of the indices that are having distribution, they all are, and sell it on an all-time high, not an all-time high. Let's call that a, 19-month high. Year and a half or so is the last time we were this high on the SPYs. You sell 460 calls, and the only way you get hurt is if the market recovers in, let's say, 2 weeks. So there's a potential trade. In our Knights group, Jack put up a similar type trade. It's called a risk reversal. That involved a credit spread right up here, a bear call spread. So think about that. Maybe we'll do one of those at the maybe 15 minutes before the close. Let's go through the rest of the markets and just take a look here. Do we have distribution days on the NASDAQ? Yeah, quite a few of them. 1, 2, 3, 4, 5, 6, 7, 8. 8 out of the last, what's that? 12 days distribution. So same thing here. These days when they stack up, oftentimes you'll see further correction. Currently, the NASDAQ futures are below 15,500. We do have support, pretty strong support right here at 15,000. I'd say the 50-day average is at 15,200, and then 15,000. I can't read it. 15,000 right there. 15,200. That's really the next support level. And these distribution days suggest that's where we're going. We'll go there unless we don't. I don't know. I don't know for sure where it's going to go. Let's go to /YM, the Dow. Do we have distribution there? Not as much. We do have some, 1, 2, 3, but we got a nice big volume update there. The Dow is more resilient, hasn't had as much distribution as the other markets. That's important to know. So if you're going bullish on the markets, you have a bullish prognosis, you may look to Dow stocks. All right, let's go to the Russell 2000.
Okay, now this is kind of telling to me because there is no distribution on the small caps. What? What? Well, institutions control most of the market, and they're not dumping their small caps. The companies that have the the least stable of the stocks on the U.S. market, they're not dumping small caps. What does that mean? They're probably not all that bearish on the market. So that's leaning me towards a bounce when I see that. The Russell 2000 oftentimes leads the market. You'll see the Russell move before the S&P 500. And the S&P 500 profit, I'm thinking now it's more like profit taking. And then I'm going to wait. How do I decide where it's going to go next? Well, I wait and see what it does. I let the data tell me. And it looks like maybe, so far in the open, yes, it looks like maybe 4,500 will hold. So that's the best I can tell you about all this stuff. Let's look at the VIX futures /VX. What are the market makers saying about all this? You zoom in so you can see this a bit better. Yeah, the VIX futures are slightly lower than they were on Friday. All right, so market makers are like, I'm not convinced. Let's see what happens. They're probably thinking the same thing as I am. Well, I mean, I don't, that was presumptuous. I don't know what they're thinking, but they're certainly not too scared, more scared than they were on Friday. In fact, they're dropping the implied volatility on the average options and the S&P 500. All right, so there we go. That's where we're at. We'll wait and see what happens. Let's go to gold /GC. What's gold doing? I'm looking for risk off, y'all. I want to see gold rising. If I start seeing gold rising, maybe that means that money's flowing out of stocks and into gold, a safer asset. Not happening. Gold is actually down today. I could look at the US dollar. It doesn't really matter. I'll look at it from Friday's data and we can see today's, well, it's not going to show yet. Yeah, yeah, it is. It's the UUP has dropped a bit on Friday. Looks like we're going to open about where we close there when the market's open here in just a few minutes. Okay, there's gold. Let's take a look at silver. I want to see silver. We got a pair, a broken wing butterfly pair that I'm trading in the nights, and that trade is looking really good. Silver's down a bit, pretty volatile, channeling between 26 and 22 or so. So not much for us to do there in snipers on that one, but it is a nice sideways trade. You could do a condor, sell a credit spread up here, sell a put spread down here, credit spread as well, and condor this thing. I'd be a little leery of that though in this market. The markets start to tank. We might see silver pop up along with gold if we do go into risk off. Let's see what else. Bonds. Oh, bonds have bounced a little bit. That's cool. Bonds are flat for today. We got a nice bounce on Friday. Volatility. You know, that jobs report, when it came out, it was hot, like a couple 100,000 more than expected. And the time before, it was like 300,000 more than expected, roughly. And that's not what the Fed wants to see. And with that, the possibility of the Fed being more aggressive later in the year on interest rate hikes, bonds have dropped in response. All right, what am I missing? What am I missing? Oil. Let's take a look at oil. Oh, this is interesting. Oil futures are pretty flat. Look here, resistance. Look at my light white line, my gray line there. Strong support right there where we are. But gold, oil cracked through the 200-day moving average and has been rising ever since. I like if oil gets above 84 here, I'm even more bullish than I already am on oil. Oil stocks right now are hot. And you know, those are the kind of companies that can withstand a bearish correction because they're based on a commodity. And they're where oil goes, so do they. So oil is really strong right now and remains strong. Natural gas, we do have a trade on natural gas /NG. And that one, yeah, nice sideways. I tell you what, I'd love to do an iron condor on this bad boy. selling a 3-call spread, selling maybe a 2-call spread, put spread underneath iron condor, or a butterfly, or probably the best trade on this would be a calendar spread. So maybe we'll look there as well today. All right, I think that's the 4 corners. I've covered all of it. That's where we are today. Here's our portfolio. And we got our second loser out of 37, I think it is. Adobe tanked along with the rest of the market. Let's take a look at what happened here. By the way, if you're using Tom's tools and you have the portfolio report, if you want to pull up the trade, you can click the name of the trade, and that will put you in edit mode. Or you can click any of these 3 columns here, and this column ending, if you click it, it will take you to the trade. This link here, if you click it, it will take you to this date. So I see some of you clicking over here. Don't do that. It's faster to grab just the ending here. And then, of course, you could also go to the lowest point during the life of the trade or the highest P&L during the life of the trade. You can do that as well. So I just clicked here, and then here's my Adobe trade. This is the day we exited. All right, let me turn off the closing legs. Look here, 8.3. Turn off the closing legs. Let's hit risk graph. Now I got to tell you, I got a little flustered last week on Friday when I heard people telling me, well, I'm in the Adobe trade. This is Thursday, by the way. So August 3rd was Thursday. And Adobe tanked. And that's what happened. It came down with the rest of the market. It was a really good trade. And then bang, the market corrects. Adobe tanks. And we ended up with the stock closing below the break even. If you want to trade these sniper credits, please hear me. Once again, I say this over and over and over. I'm going to dump some of my frustration. You want it to trade this way? Make sure that you size your max risk to a point at which if you lost all of it, it wouldn't hurt your account too much. 2%, 3% of your account value max on these, because they're very difficult to adjust, especially if you do a 7-day trade. The rules are simple. The rules are, if the stock closes lower than the break even, then you exit. Don't ask any more questions. Don't try to adjust. Just get out and let probability be your friend. Take the loss, take the hit. Here's what happens, and I know this well because I traded just a boatload of credit spreads. You're like, oh, well, maybe the stock, I want this. It's not, I don't want any more loss. It's, oh, I want to make my money. Forget that. It's excruciating when you're waiting and hoping for the stock to recover. Don't do it. Just get out. Get out of the trade if the stock closes lower than the break even. Please. It's not worth the psychological distress of hoping and waiting that the stock's going to work out. You can always lose more. And so I closed this out. I'm following the rules. I closed it out at the close on August the 3rd. It had one more day of time left. I closed it out. Had you not closed it out, this is what you would have been dealing with. Well, certainly a lot of stress while you're waiting and hoping. And then had you waited, let me go to the latest date here. Had you waited, you'd lose more than $245. Well, yes, even there, you still would have only lost $245. But the rules are simple. You know, that you want to get out if the stock breaches the break even. That's the hardest part of credit spreads, y'all. I know it. I can tell you the number of sleepless hours I've had or sitting in front of the computer from 12 o'clock to 4:30, just waiting and hoping the stock's going to go where I want it to go. It's just not worth it. So simple rules, follow the rules. If you're going to trade these, follow the rules. If the stock closes less than the break even, you exit. Also, if you can buy the spread back for 10% of what you sold it for, in this case, that would be 9 cents, maybe 10 cents, GTC order, take it off. Take it off, take it off, take it off. All right, I'm off my soapbox. You know, we do a lot of adjusting in the MWTC, but these, no, don't do it. Now, Carla, she got lucky on one of her adjustments. which I told her about. I mentioned on the call yesterday or Friday, excuse me. And you can adjust them a little bit, and you can contain this risk by adding another credit spread. All that's possible. But for those of you that are not so advanced, certainly just follow those rules. Do you know what they are? Here they are again. If the stock closes less than the break even, then just close it out or buy it back for 10% of the original credit. Good till cancel as your profit stop. Boom. Position size. Are you okay with losing 405? Because you might. Then if you say yes, if I lost it all, it wouldn't hurt me so much, then do it. Then do it. Now, after all that ranting, I will say, I feel better. Thank you. We've had 37 total trades, and we got our second loser last week. We are still up an average of 13.84% every 6 days with a 95% win rate. It's phenomenal. And we lost one on Friday. That's this game. You got to be okay with it. How do you get okay with losing 245 bucks? Well, you look at your portfolio report if you have history in a live account, or certainly go back and back test it. Back test. Get some, if you need help deriving conviction around exiting these trades in the appropriate fashion, then do it. You know, whatever you got to do. It does help to see 100 trades. Okay, well, these are live trades, but back testing 100 of these, and then get some data to support and create some comfort as you take a loss. You know, great traders know when to take a loss, and we know when because we have simple rules. Okay, now we had one loser and two winners last week. LRCX. This is another one. I heard a lot of stress and strife on Friday about this one. Let me turn off the closing legs. You want to avoid stress and strife? Well, just follow the rules. All right. Did it close below the break even? Nope. Had you had a good till cancel on to buy this spread back for 2% or 10% of the original credit, we got out for 2 cents here. That was the actual fill price in Thinkorswim. But you know, had you put that order on, you could have just said, I'm just going to wait and see what happens by the close. Here, you would have waited. The stock closed above. Here, it's getting a little hot. It closed above. And then Friday's action, it actually kind of went up. It opened, let's see, it opened right here, right at, pretty flat, went all the way up here, came close to your break even. Oh, crap. And then closed higher. And that spread was a winner. Following the rules. Please follow the rules. I guess I'm not done yet. I guess I'm not done with the ranting. It's important though. Maybe I'm reliving some of my own stress because not always, but often I would hang in there when I shouldn't, in the early days anyway. Roku was another winner. This one behaved a little better than the other ones. Let me turn off the closing legs. Risk graph. Gerardo, you jump in if you see any trades that anybody wants to do. It gets look at this, man. You're like, it's Friday and the stock's tanking with the rest of the market. You're like, oh crap. Forget the oh crap. Be there at the close. If the stock is less than the short strike, break even, then close it down. And we did in this case. I put an order in. We bought it back for 2 cents. Good till cancel. That filled right before the close, and this one was a decent little winner. We generated how much? Let's see. Let me turn that back on. We had $400 of initial risk, and we closed this one down for we closed it down for $18 or $90. What's that? 90 divided by, it's almost a 20. It's roughly a 20% gain, almost a 20% gain in just a week. So anyway, one more time, the performance is really good. And we do have our UNG trade. This one's getting close to a GTC 10% buyback. It's just behaving very nicely. Now, the trade plan on this is you can do one of two ways. You can buy it back for 10% of the original credit, which was 12. We could buy the spread back for 3 now. So you have an order to buy it back, buy the spread back for a penny, and then do nothing else. Because if the stock closes below 650 on August the 11th and we take stock, then we'll just own it and sell calls against it, or just hold the stock. If you're stock traders, that's another approach. So anyway, I'm really happy. I think our portfolio is good. I'm feeling a little better, actually, that we've had a loser. I've never seen performance like this before in my entire life as a trader. Two losers out of 37. It's just phenomenal. Okay, now a couple stocks. Go ahead,
Mike. We are having Phil is saying that there is potential vertical spread on LMND.
LMD.
LMND.
Oh, lemonade. Lemonade, that cool, refreshing drink. Yum, 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 yum. Now, Friday, obviously there's earnings here from Friday. Now, here's the thing I saw. The stock's got the 200-day average, just bouncing off the 200-day average. Right now it's at 1720. So this was, I guess that's Thursday's action. Hit the 200, stopped. Friday's action, 200's holding. I'd rather there not be a floor. I'd rather Lemonade not have any support. So that's the one caveat when you're putting these credit spreads on. Obviously, the idea would be to sell a call spread up here, maybe at 24. The news is not fresh. Now, had we gotten in on this day here, selling at 24, that would have been Thursday of last week after earnings. Let's check the earnings real quick. I tell you what, if I see a lowered future guidance, I might want to do something on this one. I do have another that I like a little better than this one because it's not as fresh. This one's, the IV had a chance to cool off. Lemonade stock soars after hours. What? On better than expected results. Outlook follow. Strong run. Morgan Stanley list price target. I don't want to. See, that starts to say no. I don't want any good news anywhere. Morgan Stanley lists the price target after earnings. Maintains underweight rating. That's kind of like a backdoor comment or a underhanded positive thing. Maintains underweight. Yeah, we're going to lift the price target to 15. I wouldn't buy much of it. I'm looking for lowered future guidance. If I see that, I might be more interested. I'm concerned about a bounce at this stage off the 200.
You notice their earnings beat their estimates.
Yeah, I know.
Bill tank.
Exactly. Which is a little curious. That it happens quite often. But now I'm looking for, maybe they lowered their future guidance. There's some negative news in here, at least institutional traders considered it negative. And I'm just going to look through here. Outlook follows strong run. Okay, the stock soars after hours and then tanked and when the market opened, better than expected results. Outlook follows strong run. And I could read through here. Usually if they lower their guidance, it's in the title. So maybe Phil, if you could just take a quick look there while I go to the next stock that I actually like a bit more. And let's see, what's the news? Why did it drop? Is there lowered future guidance? Morgan Stanley maintaining underweight is not a very positive nod by that company. But I do love this. Had this been Thursday, Phil? Yeah, heck yeah. Maybe selling a call spread at 24. I think that's still the place to sell, around 24. Sell a 24 call spread. But Phil, I'll let you look a little bit more into the earnings and see if you can fine tune the bad news and see if there's any more bad news than what we see here. And then I've got some stocks I was looking at here. I liked, actually Gerardo found this for us. And I like it. One of the ones I was looking at, and we're off, is Sage Therapeutics. So I'm in barchart.com, stocks, pre-market trading, and Sage got a haircut. It's a pharmaceutical company, down $17, 49%. That one caught my eye. Let's go to it. What's it doing? We got to hurry because I've been preaching so much. Here it is, down here at 20. All right, now these are hard because it's all blue sky. Where do you sell? Well, I'd like to sell up here, you know, right there, maybe 30. The stock's already starting to run up. How far is it going to run up? I don't know. The news, let's check the news this morning. There's a lot. Oppenheimer downgrades Sage Therapeutics to perform, cuts price target. Why did it drop? Obviously, it's an FDA thing. Let's see. My God, there's a lot of news here on this one. I just want to get a general feel for what happened. FDA, that's August 4th. Biogen say FDA approves. Okay, Sage Therapeutics, Biogen say FDA approves this particular stock drug for postpartum depression. Downgrades looks like. Oh, they announced earnings. That's what happened this morning. They announced their earnings. Now I'm just looking at the news here. 2Q loss. Come on, give me some summary. Misses their estimate. Their sales and earnings were below estimate. It's a hell of a haircut for that. Company assessing a resource allocation. There's so much news here. I'm having trouble finding some really solid bearish news. The stock seems to want to be stay below 20. Okay, so this drug, Zurzuvae, wait, sounds like a record going backwards. Uncertainty about that being approved is part of it. That's just a hell of a haircut. 47% haircut, 48% haircut on this news seems extreme. Okay, so Sage Therapeutics stock craters 49% after FDA approves this particular drug for postpartum depression, but not major depressive disorder. Okay, so the drug, it was really after major depressive disorders, and it apparently did not cut the mustard there, and therefore the stock has dropped. So it sounds like the drug isn't doing what they had intended to do, at least from the FDA's perspective, and the stock has cratered. I like it. I like it. I think the problem we have now is how close do we want to get? How close do we want to get? Let's just go to the option chain and see what's available. All right, so I'm going to go right into vertical Thinkorswim simulated trading account. And here's why I want to sell. I would love to sell at 30, and maybe I'll come down to 25. I don't think I'd do 20. So 25 would be as close as I'd want to get on this one. These are great, but the problem again is that I'd rather the stock be right here at 25, because then I could sell at 35, right? Which is what these levels are now resistance. And so I don't have a clear resistance level here. I could do a longer term chart. Let's see what's out there. I mean, it hasn't been here. This is a max chart. It's never been this low. The lowest it's been since today is 27.50. All right, that's the safest place to sell. Let's see if there's any premium. There might be this early. There's not. There's nothing there. So as I go, so this, and the only options we have are August 18th. This is a week from Friday. And so from here, I can just slide down. Let's go to 25. And just looking here, 2.5 point spread, making 5 cents, 245 in risk. Nope. Here's 10 cents, 5 cents, 20. Now I wouldn't sell at 20. It's too close. The stock's at 1867. Heck no. All right, that's not going to work because there's simply no premium at 22.50. Well, 10 cents divided by, so it'd be $10, risk $240. There's just not enough premium there for us to trade this one. All right. The other one I was looking at is APLS. That's also in this list. APLS, that was also a tanking. Let's take a look at this one. Yeah, this thing is just tanked. Let me go ahead and put up a daily chart here. Let's go back to a daily chart. Yeah, it tanked before earnings. So here's earnings. Zoom in a little bit. I mean, this thing has just been decimated. 85 just a month ago. Now it's at 20. That's huge. And the stock has gapped down today. Earnings happened here. The stock dropped today. The stock has dropped 15% right now. And let's see why. What happened? Wedbush lowers Apellis Pharmaceuticals price target to 29 from 32. Says continues to hold cautious outlook on shares. All right. So there's a downgrade. That was part of it, I suppose. Earnings obviously weren't good over here. What else do we have for today? That's about it. So basically a downgrade came out. Maintains, and then HC Wainwright came out and reiterates a buy, probably because they have a portfolio of the stock, I would guess. Anyway, that's interesting. Maybe 25, maybe 25. Let's zoom in a little bit more, see what's there. The stock is bounced. The low today was 20, so it's found 20 support. Now, if it finds 20 support, might it drop? Might it recover up 25 after the downgrade? It might. So 25 would be as close as I'd want to get. Let's see what options are available. August 18. So 25. If you sold the 25s, that's pretty good. That's a what, 33% return. No, I'm sorry, it's a 5-point spread. So it's still not a lot of money there. 25 cents, risk 475, and you'd have to be right close to the heat. I think the first two stocks today are going to be how to deselect potential trades. I think 25 is pretty good, but I don't like that it's bounced off 20. So we could get a bit of a bounce here. I could go into VWAP to get a general feel for it. I'm not going to do that today. We do VWAP. We're having a VWAP. Jeff's teaching a VWAP course on Wednesday at 8:30 Eastern. So you can learn more about VWAP there. It's the second of his series. And that's for subscribers. If you're a subscriber to anything, then you'll have access to that. Is that right, Gerardo?
Correct.
Correct. Okay. All right. So I'm not super excited about 20 support. Things can happen. Okay. Now I got a little lesson for today, and that's going to lead us to, actually, before we go any further, Phil, did you find any more news? And you'll have to unmute yourself if you're still here. Okay, Johnny's got a couple here as well. Oh, there's quite a few. Let me see. I'm just looking through the chat. Jeff Sleppen makes the point, psychological capital is more expensive than trading capital. Yeah, man. Especially at our age, Jeff. I ain't got time for that. And then Carla's asking about IRTC. I haven't heard back from Phil yet. As soon as Phil gets back to us, we'll check out that stock as well.
There's no premium. I checked. There's no premium.
No premium, Carla. Thanks for checking.
Okay.
Nice stock though, right?
Yeah.
Uh-huh.
Good
I would have
start.
loved this one on Friday.
Yeah. Found that on FinViz. Thank you, Gerardo.
God, if this one happened, this is ideal here on Friday. If a stock gaps up, here's earnings, great earnings, stock gaps up, and then it gaps up above the 200-day average. Why is that better? Because then I can sell underneath this the layer of protection. And had you done that on Friday, maybe for this Friday's expiration, you'd be in really good shape. You could have sold at the 110, sell a 110 put here on Friday, bang. That's like shooting fish in a barrel.
They don't have August 11. It was August 18 is all they have.
Just August 18. I would do that. Yeah. Then again, because it's above the 200.
Okay.
Yeah. Good one. Why didn't you should have let me know on Friday.
I was too busy managing that other loony trade, Mike.
Oh, I know. I remember that one. I want to hear about that actually. Maybe
Yeah,
you could share a bit at the end of the
Okay,
call today, if you don't mind. That'd be great.
not at all. Okay.
All right. Thank you, Carla. And then Paulina has VRTV. Not sure what to do with this. Big gap on Takeover News. Takeover News earnings is tomorrow, next expiration. Here's what happens on Takeover News. You can't really do anything with it. VRTV, without even seeing the stock chart, I can tell you it's probably going sideways. So this news must have come out today. This will likely go sideways. Veritiv agrees to be acquired. All right, so basically this stock will end up at around 170. All right, so that's the share price. This other company is buying the stock at 170, and that's about where it's going to stay between now and the actual purchase. All right, and what happens there, Paulina, is the IV comes out of the options, and there's just no premium. If you wanted to do anything on this, it would be to either a calendar or a butterfly. I mean, a butterfly, not a condor, but a butterfly. Sell the 170 strikes in the middle, and then buy the higher and the lower. But again, doubtful there's any premium there. So not much we can do with that one, Paulina. But thanks for bringing it to our attention. See, these are the important things that get distinguished on this call. So thanks for the example. Cleo says Sats EchoStar might be also a good candidate for a bull put spread. However, at resistance. Well done, Cleo. SATS. Let's take a look at that one. I actually like it. Yeah. Good call, Cleo. Right here is 21. And has it been above 21 or closed above there? No, not for a while. And that's where it is. And so what that means is if I come down here and I sell at 19, 20 would be too hot for me. 19 maybe. I would do 19 on this, but not 20, because the stock's right at resistance already. It's right at 21. So institutions aren't yet ready to take this stock any higher than 21. So I would not sell 20. I would consider 19. What's the news? Upgraded to strong buy. That's really good news from Outperform. So that Raymond James upgrade is the reason for the gap up. And Raymond James is one of the more, what's the word I want to say? I don't want to say reputable, but they're strong. I like Raymond James. And then what I'd want to do is sell. Let's go back to the chart. 1950 maybe, 19 better. That's safer. Well, heck, 15 safer, but you can't get any credit. So 19 would be ideal. 1950 maybe. Let's go back to trade. And let's find 19 on the puts. There aren't any. There's 2.5 point strikes. So the only one that has any premium will be to sell the 20 by the 1750. And that's going to generate 22 cents of credit. 20 cents of credit. And again, I'll repeat this again. To determine the risk in this spread, if you get 20 cents, your risk in the spread is the distance between the strikes, which is $2.50. All right, minus the credit. So your risk is 230 or $2.30. So you're getting 20 cents, $20 on $230 in 11 days. Yeah, it's a little light on the premium, and you'd have to go up to 20 to get it. So that one, Cleo, doesn't work. And I would say it's more important to know which ones not to do than taking ones. It's really important. And Johnny says Biogen may move in sympathy. Look, it says citing an analyst, routers notice that the stock of both companies might fall, if the drug was approved only for postpartum depression due to the smaller patient population. Let's take a look at Biogen. Yeah, I'm not going to do these on a might. Okay. So snipers is something happens, boom, you snipe the profits. That's the idea. Okay, I've got 15 minutes, and thanks for those that have put up trades. Really appreciate that. Now I'm going to talk to you about FinViz. Here's another thing I was playing with again. Detecting insider activity for directional probability. Are the rats leaving a sinking ship? Is another way to think of it. And FinViz has a scanner that will detect if there's any insider selling. You know, insiders that, you know, especially if they're executives in the corporation, why would they be dumping their stock? Maybe they know something that's not public yet. That's the idea. Maybe they're jumping off the ship. You go to screeners in FinViz, select insider, recent insider selling, and then stocks that are down 5%. You can do more than 5. And I'm going to do this live in a minute. And this one on the top of the list caught my attention on GoDaddy website. Also FNKO's in here. So let's go look at some of these here, and I'll go right into FinViz. And with the time we have left, we got time to get into maybe GoDaddy. We'll look at all these here. So what you do is you go to screener, well, finviz.com screener, you select screener, and then you under these signals, and there's a lot of really good signals here, even downgrades and upgrades. We talked about those. So recent insider selling. And then I said, all right, I need some other technical indicator that shows bearishness. You can say, what about stock below the 200-day moving average? I can find it. Price above. Oh, there it is, right on the top. I missed it. And none are below the 200 at the moment, but these stocks here are down 5%. Where'd they go? Let me try that again. I lost the refresh. Okay, so these are no longer on the board for today. GoDaddy was for Friday. Here was GoDaddy. Bouncing off 70. They came out with earnings on Friday. What were they? Let's see. GoDaddy shares are trading lower after the company reported worse than expected financial results and issued revenue guidance below estimates. There's blood in the water. There's blood in the water. Lowering future guidance. Our earnings were crappy and they're going to be worse next quarter. I mean, is that stock going to set new highs? Probably not. Probably not. So perfect opportunity for us to sell. Now, the caveat is that on Friday, let me zoom in here so I can read what I'm doing here. So on Friday, the stock did close below 70. Now it's attempting a recovery. It's at 70.41. Might it rise from here? It might. Where might it stop? It's got crappy earnings and they lowered their future guidance. Not likely that it's going to recover that much. So I like 75. I like 75 right at the 200-day average. Depending on the strikes available, we might go a little lower, but the ideal place right here would be to sell at 75, right at the 200-day moving average. Even though it's bouncing off 70, at least right now, if it does bounce, we've got a good chance of various resistance levels, including this one, including here, 72, 74, 50-day moving average, and the 200. Yeah, let's see if we can get anything for 75 at 75. I'm going to go to trade. I'm going to look at both this Friday and next Friday. Let's get a few more legs here. So the one I want is 75. What's there? Nothing. I can see that now. The bid-ask spread, 75 cents negative. That's a debit. 75 cents credit. Mid-price, zip. Nothing there. Just looking down the list here. There's just no premium. How close would I have to go? Yeah, no way I would do here. There's no premium anywhere, at least for now, right at that level. So then I'll go to the next week. I'd be okay with holding this for a couple of weeks. Let's find 75. Now there's 25 cents credit there. That's in the ballpark. I like it, actually. Let me get my little spreadsheet out again. Okay, if we sold the 75, what? Seriously? 25 cents credit on 50 cents of risk? Surely you can't be serious. Man, that's a 50-50. That's a 50% profit by a week from Friday, provided the stock is below 75. Now, if you want to get a little safer, oops, we could lift it up a bit. I'm going to go for this one though. What if we sold 75.50? There's nothing there, but here there's premium. You could drop it a little bit lower. Now this could be an aberration, but if they'll give it to me, I'll take it. Let me do it fast because they might take it away. This would be a great paper trade. All of these trades are great paper trades. I'm going to post this in the WhatsApp live feed for those that have a sniper subscription. Not a sniper subscription, but any subscription to our tools, our hedge fund, nights, earnings. Okay, I doubt we're going to get it because the other, even the one below, isn't showing a credit. So let's try it. See if we can get it. Put a line in the water. Doesn't hurt. Maybe they'll take it. So I just put it in for 25 cents. Not happening. Let's drop it. Got to hurry. Again, I think it's an aberration. Dropping it to 20 cents. Oh, heck, I would take 10 cents on this bad boy. That 10 cents, that'd be 25%.
I'm showing 13 on Tasty for the
Yeah,
mid.
I see. I would take that. I think that's good. Let's try for, I'm going to try for 10. So 10 cents on 50 cents of risk would be 25%. Yeah, I would take it if they give it to me.
Yeah, it's dropping fast. It's down to a nickel now at Schwab.
A nickel would give you 11%.
That's down to a nickel.
Okay.
Easily chip.
Yeah, it is down to a nickel. So they're bleeding it dry. Let's take a look here. What about the 74.50? Nothing. 5 cents credit. I'll take 5. 5 would be 11% by next Friday with super high probability. So let's try for 5 cents. Monitor. All right, that's as low as I'll go. You want to give that to me? I'll take it. If not, I'm going to go find something else. Let's just look at some of the other ones on the list here. FNKO I know about. WEAV Communications, never heard of them. Pretty big market cap. Let's look at WEAV. Inside, remember, all of these have insider selling now. Let's look at WEAV. Just checking volume as well. Volume wasn't above average on this day here. Zooming in a bit more. I like 12, but I want to make sure we've got some news. Goldman Sachs maintains neutral weighting. Raises price target though to 11. What happened on this day? That's the 4th. That's the same day I'm looking at. WEAV Communications, financial results happened here. The stock dropped after. Why? Loss, bad earnings, of course. Announces results. Now, they beat out their earnings per share, beat the estimate. And the estimate was to lose 7 cents a share, and they only lost 5 cents a share. The sales beat. That they beat their sales estimate. You know, companies that first go into business, they sometimes they operate at a loss for a while, but it's moving in the right direction, and their sales are increasing. So that's a little bit of a spanking that happened here. There's strong support here, and it was upgraded. No, maintains neutral rating, but upgraded the price target to 11. Stock's already starting to bounce. Maybe 12. Again, insider selling is as well. Remember that. But again, it's bouncing off 10.
But it's
Let's see
zero
what's there.
volume.
There's no
and
volume
huge
either.
Slippage, yeah.
Let's take a look there, George.
Yeah.
Um,
The open interest on 12 was 100. No volume at all.
Yeah.
The bids are 0.
Yeah, there's
calls
nothing here.
Or the asks are 60 and 55 cents. There's just nothing there.
Nothing there. Thanks, George.
Yeah.
I agree. What about FNKO, FNKO? Insider selling.
Got to be careful with that one.
Let's see. FNKO's down today. Earnings happened right here, which was what, Thursday? The stock tanked after. Let's check the earnings. Feel like an ambulance chaser. I want to see some really bad news. All right, let's take a look. Lowers sales outlook as softness expected to continue. Yeah. Let's there's blood in the water. Insider selling. I like 7 on this one. There's support at 6, but look at that volume as the stock tanked on Friday. 8 is ideal, 750 better, not less ideal. And then 7 is as close as I would even think about getting on this one. So let's just see what's there. 750 is the highest strike I can get. And then we've got 5, 750. You can get $1.25 credit with $1.25 risk. It's a 2.5 point spread. So there's a
no volume again.
I don't worry too much about volume. Mostly what I'm interested in is slippage, but not so much on these. FNKO is a pretty liquid stock. What's it? Let's take a look here. Anyway, we can't sell it.
Zero.
What?
Calls. Bid 0, ask is a nickel on the 10.
Yeah, there's nothing there, George. I agree. We'd have to sell at 5. That's a 50-50 ball. All right. So your risk would be if we got $1.25, our risk would be $1.25. And then the game is, so if you sold, let's just put it up here. Yeah, if you sold the 5 call and your credit was $1.25, then your break even would be $6.25. And I can build that risk graph if you like. So basically, that's a trade where as long as you think the stock will stay below 625, then you'll make some money. I'm not convinced that's going to happen. So that one's not going to work either. Let's see what else is on this list here. We looked at WEAV, NRGV, pretty big market cap. Price is only 3. That's okay. I don't mind that. Let's see if there's anything there. NGRV. Doesn't have options. Unless I typed it in wrong. NRGV, that's why. NRGV. Does it have options? Yep, it does. The stock is at 3-ish, 350. Not ideal though. The stock hasn't really tanked much, even though there's insider selling. I would maybe sell at 350, but not, I wouldn't. It's just too close. And there's no 350. I'd have to sell at 250. So those don't work either. All right, now we have 2 minutes to go, and let's take a look and see what the markets are doing. Okay. So this is the SPYs, distribution. We're below 450. Inside day here. I think the volume is going to prevail here. We could see a recovery, but these are the kind of trades where you start calling a top. You know, Jack, you did on the bearish risk reversal you put up. A 460 call spread up here. To me, we might see a recovery. What time? I've got 1 minute. I was going to build a risk graph, but let's just go after. What's today? Today's the 7th. What's Friday going to be then? Look at it. I love the SPYs. Look at these expirations. We have expirations every day. So let's see what's there for Friday. And once again, I want to sell at 460. Is there anything there for Friday at 460? And if not, I'll go out another week. Let's go take a look here. 460 is right here. Really nothing there. There's 3 cents. On $1 of risk is $97 in risk. All right. Well, let's sell more time. Let's go out to August 14. Not August 14. What is it? The 11th, August 18th is next Friday. Okay, let's see what's there. Now there's 12 cents there. Let's build this in Tom's Tools. We'll go about 5 minutes late today since I didn't find anything. That happens sometimes though. I'm not going to force trades. We haven't forced a single trade here. We're not going to do it today, this morning. What day is it? Where am I? Okay. We have today's data. And I'm going to go to trades, edit, create trade. Let's go after the spies. You can do this on the Qs and the diamonds as well. Okay. So we're going to sell August 18. There it is. And I want to sell the 460 calls. And I want to buy the one above, 461. Sell one. This is a distribution day trade. What can we get? All right. That's pretty decent. We're not going to get 14 cents, doesn't look like. What can we get? It says 12. Let's just put 12 cents here. And I'll go for more. And let's zoom in as well. Let me do this quickly. Zooming in so you can get the risk, a good look at the risk graph. Let's go from 425 to 500. And I also want to look at the IV because that's important too. 425 to 500. Let's see. Yum, yum, yum. I shouldn't make those noises because it's like it could be construed as advice, but this is a nice setup. Let me say that. You know, the reason it's a nice setup, distribution. Is there going to be a recovery in 14 days to multi-year highs or almost that would be over probably like a 17, 18 month high? Is that going to happen right away? It doesn't look like it. It might. But the good news is that if the stock does recover, the IV, which is somewhat elevated, will drop. And that helps our trade. Basically, what does that mean? If there's a recovery, then IV dropping will help reduce the loss up here. So I like this trade at 12 cents. That's 13% over 11 days. Pretty darn good. Let's size it. This is the most important part. You know, if $88 doesn't get any attention, doesn't get you bristly, then maybe that's the right price. 2 to 3% of your portfolio's value. Very important that you do that so that you can more freely follow the rules. So I set mine at 500 here. So with that, I could do 5. I'm going to do 5 of these. Risk graph. 440. I can't do any more. And this is going to bring in $60 by a week from Friday. And when we buy it back for a penny, maybe we're around 11% return or something like that. But over 10%, certainly probability of profit on this is 92.39%. Let's round up to 93% statistical probability of profit. It's even higher than that because for us to get into trouble on this trade, then the stock is going to have to breach its multi-month high, its 17, 18-month high, and then we might get into trouble. It'd have to break above 450, above 455, and also 460. My break even is 460 and 11 or 12, 460, 12. That's our line in the sand. And so 93% is statistical, but when you add in those layers of resistance above, it's higher than that. So this is a really, really good trade. So let me go ahead and get filled on this for 5 contracts. Let me paste it for you all as well. Let me do that first. So if anybody wants to play, paper trade this, please. Do yourself a big favor. There we go. And then we'll likely get this. Let's go back to trade 12 cents. Natural is 11. We're going to get 12. But what about 13? May I have 13, please, Mr. Market Maker or Mrs. Market Maker or computer market maker? What?
Got 12 live.
You got 12 live. All right. So I have to beat you now. So I'm going to try for 13. Not happening, not happening. All right, I'll take 12. This slippage on S&P 500 options is the tightest of every single other stock. The slippage is pennies wide, 12 cents. Now the mid price is 13. I bet that's because the SPYs are rising a bit. No, not really. Maybe some IV. All right, I'm going to take 12. I'll track it at 12 since we have a community fill on that. 5 contracts, 12 cents. All right, that'll fill. Okay, so I'll track that one. And later today, well, probably in the next few minutes or so, I'll post this on the forum. And so if you have an account with us, a subscription account with hedge fund or earnings or nights, of course, then you'll see it in WhatsApp. I just posted that, and then this will be on the boards for anybody that's subscribed to Snipers. So expect that here under Snipers. So you go to Snipers and you'll see it here a bit later this morning. All right, so let's track that one. I'm going to save this trade in our live trades. And I'm digging it. This is exactly, y'all, what I did using distribution with breaks below support on volume to really do well in the COVID crash. So that's that follows rules. Again, once I'm filled, I'll have a GTC order to buy this back for a penny, zooming in a little bit here. And then if the stock closes above 460.12, then I'll exit. Otherwise, I do nothing. That's it. No, don't hold it. Just get out and move. Just go on to the next. We'll get into the street fight. That'll take your psychology down the tubes. All right, with that, everybody, we're going to close for today. We do have earnings coming up. Okay, go ahead.
We had a couple of comments here in the chat box from Johnny and Dr. Daniel. They were talking about APLS, NKLA, and NGVT. If you have a chance really quick to check those.
Okay, yeah. Let me turn on my. Okay, so NKLA is one that you were talking about, Gerard. I was going to look at that one today. NKLA. Yeah, what happened there, Gerardo? You know.
Share your screen, please.
Okay. Where's the button? What happened on NKLA? You can answer the question. What happened on NKLA last week?
Well, NKLA announced really good earnings. They overpassed their expectation, and the future is looking pretty good for them. But at the same time, they announced a change of their CEO that was with them for a long time. So that created a pretty weird feeling in the market.
Mm-hmm.
So I think my prognosis is the stock will rise from there after all this craziness, because the change of director is passed, but we'll see.
Yeah, their CEO resigned. It was their 4th CEO that's resigned. So earnings, how were the earnings though? Yeah, it's a little bit of, it's a little bit of volatile stock. If I was to do anything with this, if it bounces, I think 2 is going to hold on this. It's just a little weird that they've lost their 4th CEO. Why? What's happening there? So the news is a little mixed. So I'm a little nervous about it. If I did anything, I would consider selling a 4 call spread up here. Or if you want to jump in front of the train and count on it stopping at the station, right at the 200-day average or 2, and you sell right at 2. But I wouldn't do it while the stock's continuing its slide. What are the other ones, Gerardo?
APLS.
Yeah, I was looking at that one earlier. I did talk about this one in the beginning. It's bouncing off 20. You could sell at 25. Not a lot of premium. I don't like the stock that is bouncing off a 20 floor. So I did talk about this one already. Is there another one?
And then NGVT,
NGVT.
V like vowel,
What?
V like view. NGVT.
NGVT. Yeah, this is another one I looked at as well. No, I didn't look at this one. Okay, this is a bit more interesting. Earnings, bad recovery. What's the news for today? Downgrade on Ingevity to perform from outperform. Revenue miss. That's why they tanked here. There was a recovery though. That's a little hammer pattern. You see that big tail? It opened here, closed here, above the 50. It looks like more recovery. The stock just doesn't want to drop below 54, 52, certainly. Looks like there might be a bounce here. If I see a downgrade, maybe we'll do something with it. Without digging into the details here. Yeah, they missed their revenue, but the stock seems to have taken its beating and it seems like some recovery. What I would do with this is again, sell at resistance. So 65 would be ideal. Let's see, because it could fill the gap. If it fills the gap, it'll come up here to 61 and then 65 is further away than that. Let's see what's there for August the 11th. That's the next available option. There's no premium there. And I wouldn't want to sell a put on this either underneath. So good looking technical setup, but no premium. I would pass on this one. Okay, everybody, we've got about 12 minutes over. Apologies for that. There's just, there's more to talk about than I thought. So thanks for bringing your trades and your stocks, and please keep doing that. Earnings, I mentioned the earnings companies this week. Keep an eye on those. These snipers are really good after earnings. Wednesday morning, if you want to, there is some earnings, I think, Wednesday morning. So if you want to trade the VWAP with Jeff, join us here at 8:30 Eastern time, which is an hour before the community live trading. So that'll be a VWAP day. There are earnings this week, and likely there'll be plenty of candidates. And with that, we also have earnings today at 2 p.m. Eastern Standard Time and Earnings Mastery Live. So Matt will be there. We'll see you all there. Have a great week, everybody. We love you. Thanks for being with us. Pura vida.
Thank you.
Be seeing you.